There is something weird that's happening in China.
The streets of China's major cities have been rocked by protests.
The crisis that's unfolding in China is pushing people to get to the streets and overthrow Xi Jinping.
A few voices have even been heard calling for leader Xi Jinping to step down.
China's largest market that has been driving the economy for the last 30 years is collapsing.
China's real estate industry is collapsing.
The world's second largest economy is on the brink of collapse.
This is the story of China's historic economic slowdown.
China's growth over the last 40 years was insane, to say the least. It has lifted out of poverty over 1 billion people and invested trillions of dollars across the world. This is how the world economy used to look like in 1960s. China was not even on the map. The global economy was dominated by the US and its allies. Even in 1990s, China was nobody on the world stage. But this is how the global economy looks like today, where China is becoming the most important player on the world. If China is going to collapse tomorrow, dozens of countries across the globe are going to collapse together with China. The Chinese economy isn't just slowing down, but it's literally collapsing. So, here are 5 reasons why the Chinese economy is on the brink of catastrophe. If you are ready, give this video a thumbs up and let's dive in. While the United States is experiencing inflation and the Fed is trying to raise the rates in order to bring inflation to sustainable levels, the opposite happening in China. Prices in China are falling down. In November 2023, prices has fallen down by -0.5%. But what is the big deal? Isn't that good news? When prices are falling down, people can afford more things. That sounds like good news. However, that's not the case, because deflation is much more dangerous than inflation. When people expect prices to fall down, they stop spending. Why would you buy something tomorrow if you know that prices are going to fall tomorrow? That creates inflationary mindset within the economy where everybody just stopped buying everything. Why would you buy this smartphone when you know that tomorrow the price of that smartphone is going to drop? It's exactly like buying a stock. When you see a stock that is falling down, you don't buy it. You just watch it and you just wait until it reaches the rock bottom. Where that bottom is, nobody really knows. So everyone is just watching how the stock is falling and waiting for that opportunity. But if no one is buying that stock, it will just keep falling down until it crashes and the entire company goes bankrupt. Imagine if that happens with the entire economy. Imagine you're selling TVs and no one is buying your TV because everyone expects you to keep lowering the prices. However, the problem is that you cannot lower the price of the TV to the point where you're going to experience a loss. If that's the case, tomorrow you're going to close down the business and you will no longer do that business because you know that you're going to sell it at a loss, or at least you won't make any profit at all. And that's exactly why deflationary mindset in the economy is much worse than inflation. Because if there is strong inflation, then you can just hike the rates, do something in order to bring down spending. However, when there is deflation, then changing that is extremely difficult. You see, when the pandemic hit China and the entire world, the CCP implemented one of the harshest restrictions on the face of the earth. But unlike the Western governments, such as the United States, where they distributed stimulus checks,
the IRS is now pumping out stimulus checks to millions of Americans.
The Chinese Communist Party did not help Chinese people at all. I can agree with you that these stimulus checks weren't really super money that could solve all of your problems. However, they still put food on the table and you were allowed to work to a certain extent. That was not the case in China. People in China couldn't do anything and their only options was to dig down into their pockets and spend their savings in order to put food on the table and somehow survive. So, when China is out of this pandemic, people are afraid to spend because they know that if there is another crisis that is happening tomorrow, no one is going to help them. No one is going to give them the money to put food on the table, which is why they're afraid to spend their savings. Interest rates in China right now are about 3.5%. That is significantly lower than the United States. And yet people are afraid to borrow money and invest because they don't know what to expect tomorrow. They cannot rely on the CCP for help. Nobody really knows how long this deflationary mindset is going to continue. However, if it keeps going like that, that could literally collapse the entire Chinese economy. After World War II, China was so poor that the rest of the world did not take it seriously when creating the New World Order. Even after 30 years of the World War II, China was still one of the poorest countries on the face of the earth and barely fed its people, while the United States and its allies were actually growing dramatically. The US economy hit to the point where the cost of labor in the United States was so expensive that the US companies were actually looking for a market in order to shift their manufacturing. And one of the countries that they looked into was China, because that was the moment when the Chinese economy was opening to the world, when Chinese leaders traveled to the United States and to the rest of the world to open up to the world. They understood that if they want to grow their economies, they have to open up to the world. So, over the next 2 or 3 decades, most of the US companies literally shifted all of their manufacturing to China, where the cost of labor was so cheap that it really didn't make any sense to produce any of those components in the United States. It was literally the best thing that could possibly happen to China. This was the reason why the Chinese economy grew so exponentially. I remember growing up, everything that I had, every toy that I purchased, every electronics that I purchased had 3 words on it: made in China. China literally turned itself into the global factory that produced everything. The Chinese economy grew at an average of 9% annually. That's like 3 to 5 times more than the United States. That's how China built its like $20 trillion GDP. It became China's model for success. China would build everything, send them to the United States and sell them there, use those dollars to build more factories, and then export more goods to the United States. This made China one of the wealthiest countries on the face of the earth. The Chinese economy grew so fast that experts quickly jumped in and made claims that the Chinese economy is soon going to replace the US economy in the next few decades. Until this guy came in and literally changed everything. Trump didn't like that. He just hated the idea that China could replace the United States as the world's largest economy. So he started a trade war with China.
President Trump tonight escalating his trade war with China, threatening new tariffs.
Tariffs basically means that Chinese goods now will be more expensive in the United States. So people will just stop buying them. And that's how China started losing the United States. That pushed US companies to move away from China and move their manufacturing to other neighboring countries such as India, Vietnam, and other neighboring countries. If you look at the numbers, you will find out how Trump's trade war literally started crushing the Chinese economy. It no longer grows like it used to in the past. And over the next 10 years, most US companies will probably leave China, crushing the Chinese economy. While China enjoyed 3 decades of insane economic boom, now it's paying the price for that dramatic rise. It's going through its version of the 2008 financial crisis that the United States went through. The only difference is that it's on steroids. Out of the 50 major Chinese developers, guess what? 34 of them has defaulted on their loans because people just stopped buying houses. Country Garden is the latest Chinese developer that has defaulted on its loans and declared bankruptcy. Unlike the rest of the world, China is a country of savers and investors. Prior to the pandemic, there were as many as third home buyers as the first home buyers, and there were so much more second home buyers than the first home buyers. There isn't a single country on the face of the earth that invests in real estate as much as China. And guess what? Real estate represented 30% of entire Chinese economy. You can already see what it means if this industry collapses. The only reason that home prices in China haven't collapsed yet is for one single reason. The CCP has implemented really harsh policies that does not allow developers to lower prices. However, there is so much uncertainty about the economy that prices could actually fall whether the CCP wants that or not. And if that happens, it could create a domino effect and destroy the entire economy. Imagine you're living in China and you want to invest in real estate. And you know that there are 60 million houses across China that are empty. Do you know what 60 million houses means? That's literally an entire population of France. And you know that everyone is expecting prices to fall down because of the things that we have talked about earlier. Would you really risk buying real estate today when you know that you can actually buy 2 properties for the same price tomorrow? On top of that, you know that there is a trade war between the United States, on China, and that could literally crush the Chinese economy. There is also a risk that China would invade Taiwan. And after what happened to Russia when the West and the United States imposed draconian sanctions, they could actually treat China the same way in order to prevent it to invade Taiwan. What do you think will happen to property prices? What if there is another lockdown waiting for the Chinese economy? And you know that the CCP isn't gonna help you in any way. Would you really risk spending your last savings to buy a property instead of saving it for a rainy day? Absolutely not. That's how an average Chinese is thinking right now. That's why real estate prices aren't gonna rise anytime soon. China's economic model for the last 40 years was very simple. Borrow and build. It didn't really matter what you're building. Roads, bridges, airports. As long as you're building, you're expected to make money. This is exactly why China has been building literally roads to nowhere, airports in the middle of nowhere, and even metro stations where there is literally nothing. In a span of 40 years, China has built more high-speed railway than the rest of the world combined, while the United States can't even finish the high-speed railway in California. China has used more concrete in the last 3 years than the United States did in the entire of the 20th century. This is how Beijing used to look like 40 years ago, and this is how the city looks today. However, China cannot keep growing its economy by just building roads and bridges and airports in the middle of nowhere. That era for China is over. It's time for China to move its economic model and base it on innovation. When your country has nothing, when your economy has nothing, yes, your GDP is going to grow substantially by just building the basic infrastructure. However, when you have built all of that, building a second airport to the existing one is going to produce negative growth. Now, I don't want to ignore the fact that China has reached huge milestones. It's the leader of electrical vehicles. It is the leader of 5G networks. It's already producing 6G internet. However, that's not enough. Yes, Chinese smartphones are flooding the world with their Oppo and Xiaomi. Yet, China has 5 times the population of the United States. Despite it being the second largest economy in the world, the GDP per capita of China is around $12,000. That makes it a developing country. This is the stage where most of the countries face a very serious challenge, where they become the victims of the middle income trap, where the GDP per capita of your country reaches to around $10,000 to $12,000. The labor of your country is no longer competitive. We know for a fact that the days of 9% growth in China are over. But the real question is that, will the Chinese economy keep growing when its population is declining? Now, experts point to the fact that the Chinese population is going to be cut by half over the next few decades, when its real estate market is literally crashing and it's on the brink of catastrophe. So the question is no longer that when will China overtake the United States as the world's largest economy, but rather the question today is, how long will China maintain the status of the second largest economy? Will it turn into just Japan 2.0, where the economy just simply stops growing? While it seems like the slowdown of China will drag down with it the rest of the world, that's not the case in practice. There are plenty of neighboring countries that can easily replace China, especially when the cost of labor in China is too high right now, while the cost of labor in India or Vietnam is still extremely small. Especially India, this is the country where the vast majority of people speak English. It makes it much more easier for US companies to move their manufacturing to India. Apple already shifted like 15 or 16% of its iPhone manufacturing to India. Microsoft has been in India for the last 10 years probably. Intel, General Motors and other companies are slowly moving away to Vietnam and India. China isn't gonna fall overnight. It might actually never fall. It really depends on how the CCP is going to handle this crisis. But now it's your turn. What do you think? Is Chinese economy is collapsing, or it will eventually take over the United States in the foreseeable future? Let me know in the comments below. Thanks guys for watching, and I will see you in the next one.